Hello and welcome to Wisdom Bites. Hope you're well. Thank you once again for joining us. Very much appreciated. And in today's program, I'm going to be looking at just one main theme of the video, and that is asking a very relevant and important question which is on the minds of everybody in the crypto space at the moment, and that is, are we in a 12-month bear market? I'm going to be having a look at the monthly 8 EMA as well as the SPX and the 60-day cycle to make head or tail of exactly where we are and where we seem to be heading on a basis of probability. So if that sounds interesting, you know what to do. Get yourself a cup of tea, sit yourself down, eyes on the screen, and let's get cracking. But before I begin, the usual polite reminder, please remember everything in my videos is just for educational purposes, so please always do your wider research before you make any investment decisions or any swing trade decisions. And I'm going to start straight away by looking at some of the things that may be able to give us some sort of an idea, some sort of a clue, some sort of a guidance as to where we are, and then everybody can make up their mind whether we're in a 12-month bear market or whether we're in a severe correction which is going to turn around, and whether the 4-year cycle is going to end early or still continue until the end of this year, which is where we expect. And the first thing I want to really look at is this blue line here. Now the blue line is the 8 EMA, that's the 8 exponential moving average on the monthly chart, because this has been incredibly accurate as the watershed moment where we realize that we're actually in a bear market. So if I take you cycle by cycle, you'll know exactly what I mean. The yellow lines are the ends of the 4-year cycle in each of the last 3 cycles, and we're expecting the current cycle here with this dotted yellow line to end somewhere around this period of time. So the characteristics of the 8 EMA are that before we topped out, we don't see any of these candles closing below the 8 EMA. And the first candle that closes below the 8 EMA is the sign and the trigger that we've already topped out and that we're in this bear market. In the second cycle, exactly the same. You can see that all along the final phase of the bull market, we never see a candle close below the 8 EMA. And once we close below that, that was the trigger that we're in this bear market. And obviously in the last cycle, we had a double top. On the first one, where we topped out, this was the candle that confirmed that, but it was in the wrong time frame for the end of the cycle based on what had happened previously. So there was always that hope that we're going to go into a next leg towards the end of that year. And we made a new top at 69,000, but it was when we actually closed below that 8 EMA that confirmed that we'd had a double top and that we were in a bear market. So currently, this is where we're at, and we're going to have a close look at exactly where we are in relation to the 8 EMA. The current price for Bitcoin, as you can see quite clearly here on the right hand side, is 81,781 as I'm actually doing this video. And you can see that the current monthly candle is finding a rest right on the 8 EMA at the moment. And obviously we need to keep an eye on this, because if we close below this 8 EMA, then this would mark, just by using this one indicator, that means that we can't obviously rely on it 100% because we need a confluence of many other factors before you make a major decision whether a bear market has started or we're still in a bull market. So if we close below this, then this is just one indicator that will give us a clue, an idea that we may well have topped out at the $109,000 mark. So this would suggest at the moment that while we're resting on the 8 EMA, and you can see previously we haven't closed below it, but we have protruded below it several times here. And even further back, this was the last time, back in September 2023, this was the last time we actually closed below the 8 EMA. And because that was still early in the cycle, nobody really questioned whether we were in a bear market. But this one is much more serious because we are towards the end of the 4-year cycle. And obviously we have to take this much more seriously. So at the moment, the 8 EMA would suggest we are not in a bear market. But should we close below it, then that would obviously be a strong warning sign. And then we would have to look at the other factors to see what they're saying and then come to some sort of an unbalanced conclusion. One of the other things that I want to actually look at, and many of you have actually noticed that in these cycles on my default chart, I have a white line here, a white line there, and then on the current cycle I have a yellow parabola, and that is because I'm keeping an eye on this, and when we break out of the parabola, that's another danger sign that we've actually come to the end of the current 4-year cycle, or at least going to have a serious correction. So this is a close-up view of this parabola, and what we find here is that we do have support once here, twice here, and several times the third time with 3 candles here. So you know that this is quite a strong support, and currently with this current monthly candle we are falling outside of that. So what we really need to do is we need to get back up and close within the parameters of the yellow parabola here, and that would be around about the 89,000. So we need to get ourselves back up here so that this would then become a wick and we're still in the folds of a continuation of the 4-year cycle. So this is giving us a little bit of a danger sign that we just need to be keeping an eye on. Okay, the next indicator I'm going to be looking at is one of our Bexit indicators to see whether there are signs of a topping out. And one of the main indicators that we have, and what we're really waiting for, is a cross of the green line, which is the 111 simple moving average, and the red line here, which is the 350 simple moving average. And quite clearly, when you have a look here, that we were very much going towards meeting up further up here during 2025. And currently they're not anywhere close. And sometimes I get the question that what if the Bexit indicators don't work in this particular cycle? And as you know, if you've been watching my channel, I keep an open, fluid and flexible approach to everything. The price action is always key, and just because something worked in the first cycle, the second cycle and the third cycle, on a basis of probabilities, you would expect these indicators to work for the fourth cycle. So therefore we have to keep an open, fluid and flexible approach that if some of the signs are saying that we have topped out and some of these Bexit indicators are saying that we haven't, then we have a decision to make, and everybody can make up their own mind in terms of what decision they want to make. But certainly these Bexit indicators are no guarantee. We have been monitoring them on the basis of a probability that if a few of them were triggering off all at the same time, then we would come to the conclusion that on a balance of probabilities, we have concluded the current 4-year cycle. So at the moment, the main indicator amongst the Bexit indicators, the pi cycle, you can see quite clearly hasn't actually crossed over or come anywhere close to it. So this would suggest at the moment anyway that we haven't topped out. So the ATMA is quite okay. The parabola is the one that's showing a little bit of concern, and the pi cycle isn't showing any signs that we've come to the conclusion of the current 4-year cycle. Okay, I'm going to move on to the SPX and show you something historically which is giving some cause for concern, and that is, so I'm just going back to the previous cycle which concluded in December 2021, and we can see that from the COVID situation back in March 2020, once we'd got above the 200 simple moving average, this is the purple line here on the daily time frame, so this is the daily 200 simple moving average, that we didn't come back and hit the 200 simple moving average until we'd already topped out here. And currently the SPX started the bull market back here at the end of 2022, just like Bitcoin, and once we got into the swing of the bull market, and the only time we came and hit that was towards the early part of the cycle. But since then, we haven't actually come back and interacted with this line until recently here in the last few days. So this is giving cause for concern that this is a warning sign that we may well have topped out here. If we can have a big bounce from here, then this may well be just one of those anomalies. But certainly we need to heed price action, and the price action at the moment here on the SPX is telling us that there is a red warning sign on the SPX. One of the other signs that we really need to be aware of is that once we'd started the bull market back at the end of 2022, then all of the lows that we got along the way were always higher lows. So we made higher lows all the way here until now we're actually breaking the previous low here. So this is another danger sign that we need to be aware of. And it seems like the SPX is leading the way to give us some sort of a clue. But again, it's just one indicator, and we have to put it into perspective amongst all the other indicators. So this would suggest that we may well be at the start of a bear market. But as usual, we need a confluence of factors, a confluence of other indicators that are telling us the same picture. And then everybody has to make up their own mind. And if we have a look at the 60-day cycle on the daily time frame, we've clearly got a failed cycle here. We had the start of a new cycle here, and clearly, having now gone below that point, we've now got a failed cycle. So we need to move this line over here. And this decline doesn't seem to be like a normal mid-cycle decline that you would normally get here. So from quite a few different angles, the SPX seems to be giving us cause for concern. And certainly we need to keep an eye on the SPX. But for those with a keen eye, we'll notice something here, that we are having higher lows on the RSI and lower lows on the SPX price action. So we've now got bullish divergence. So we may well be having a nice counter trend rally from here on onwards. So this could quite easily be a short-term sell-off before the normal bounce that we get here. So that is obviously a possibility here, and the bullish divergence on the RSI seems to be giving us that hope that we may well be turning around here. And if we move on to the 60-day cycle for Bitcoin, the start of the new cycle was on this hammer candle here, the low of which was at 78,197. And you can see quite clearly here that we haven't actually gone below that, so we do not have a failed cycle at the moment. So this is holding up quite well despite the bearish price action. So as long as we have this intact, then we still have a current 60-day cycle which hasn't failed. And what we really need to see is a bounce into the mid cycle here, and the key levels to really look out for, and the key levels are always the ones which are the previous highs. And the first one that I would keep an eye on is the green candle here, which many people are calling the Trump pump. That was the candle last Sunday when we had an unprecedented $10,000 move, which was followed the next day on the Monday, an equal amount of decline. And that candle at the high of that is 95,152. So this is what we really need to be aiming for. Otherwise, this could well be a dead cat bounce with another leg to the downside. But the bigger level that we really need to keep an eye on is this one here. So if you take the top of this, which is at 99,500, and you take that across, you can see that this particular level at 99,000 has been a very strong resistance here, support, resistance again, and support all the way around here, as well as resistance up to that point. So very strong level, 99. So those are the two levels to really keep an eye on. 95, the Trump pump candle, as well as the 99,000 here. So I wouldn't be convinced of any rally here until we get above the 95,000. And if the 60-day cycle does play out as per normal, and we don't have a failed cycle here, so we would expect somewhere before the midpoint to get above the 95,000, and the end of the cycle would be at the end of April. And judging by the price action here, the probability of it going above the 109,000 would be quite low. So I wouldn't be expecting anything that would be breaking the 109,000 between now and April. So what we've got now is another period of extended consolidation, and the main thing is to actually finish towards the end of this cycle around the top of that range here. So anything above 95, 96,000, if we can end towards the end of this cycle at the end of April at the top end of that range, then we have a chance to make new highs. And the danger is obviously that if we do get a failed cycle, then we may well be going down into a bear market. So we need to keep an eye on the parabola as well as the 8 EMA on the monthly time frame. By the end of this month, we should have some sort of clarity exactly where we are. But from a structural point of view, the 60-day cycle seems fine for the time being. Obviously, this price action could be a lot better. But if we have a look at the weekly time frame, we can see here that the structure is holding up very well, in the sense that at the bottom of this trend we get this hammer candle, and obviously this is bullish because we've got a rejection of lower prices. And in last week's video I gave you some targets that on a basis of 50-50 we could quite easily run down this candle in order to shake out the remaining weak hands. And if we have a close-up of this weekly candle, these were the targets that I gave you from the bottom of the candle to the top of the candle. I gave you these targets that we could easily run down the wick of this candle before we move to the upside. So this is where we're at with this particular candle, and that is that the 38.2 was at 89, so obviously we went below that. The next target I gave you was 86,000 at the 50% Fibonacci level, and obviously we've gone below that. And the 61.8, which didn't look like a high probability play, and I gave you that at 84,000. And obviously now we've gone below that, and not only have we gone below the 61.8, but we've actually surpassed the 78.6. So this is the danger here. When you get past the 78.6, then there is something else that may well be going on. It doesn't mean that it will go past this, but it just gives you a signal that there is a lot more weakness that's playing out here than normally would be the case. So again, we need to keep an eye on this, but at the moment, it's all intact, that we haven't gone below the previous weekly low of 78,200, and we made a higher low at yesterday's close of the weekly candle. Once again, on the weekly time frame, it's still looking on the bullish side, and this last week's candle is looking like they may well be just the final shakeout before we move to the upside. And moving on to the dollar, to see how the dollar is playing out, as you can see quite clearly, in the last week, this is now coming down. And we mentioned last week that we were coming up to this previous support as resistance, And then this is what we're expecting for it to come back down to these levels, about the 103. So currently it is at 103. And the next support level is going to be about 101 here. And this price action looks like it's got further to go. So if this does come down, it does give an opportunity for Bitcoin to have a rally in the next few days. And the question really is, what should the strategy be in terms of where we are? And quite clearly, all the charts that I've shown you today are showing that there's a lot of weakness that's crept into the market over the last few weeks. And all I can do is share my own strategy of what I'm thinking. Now, as we saw with the SPX, that seems to be the one that seems to be more in danger of showing signs that we may well be going into a bear market. So considering what's going on with the SPX and keeping an eye on that, then somewhere along the line, I would be wanting to take some sort of a defensive with Bitcoin. And as you know, on this channel, we're invested in the Bitcoin miners. But if I show you on the Bitcoin chart of the idea that I'm actually wanting to look at, and that is that if we put a trend line here from the 109,000, we can see quite clearly that we are making lower highs along the way. And if the SPX continues to show bearish signs, and we know that no matter what, Bitcoin will be affected by the wider markets because that's what it's done in the past. Of course, we would like it to decouple away from them, but that would be a lower probability. So in the realms of higher probabilities, if the SPX goes down and shows stronger signs of the bear market, then I would be assuming the worst for Bitcoin as well. So what I'm really looking out for is that having made a new cycle low here, so this is the start of the new 60-day cycle, and at the moment, as I say, we've made a higher low. So this is all intact at the moment. But if the SPX keeps going down and showing bearish signs, then when we come up to this white trend line, this may well be a point where you would want to reduce some positions, and that will always depend on how comfortable anybody individually feels. And that could be 10%, 20%, 25% or 50%, or whatever is unique to your own situation and your own strategy. So this is the first place where I would be wanting to take some defensive positions here, wherever this is going to be, where we hit this trend line here. The other way of doing that would be to take the 109,000 on the Fibonacci level down to this level here at 78,000, and you can play it level by level. So if we came up here, then the 38.2 would be at around about the 89,000. So this would be the likely point, as I say, on the white trend line. And the second point would be the 50% Fibonacci level. And if I move this here, you can see the figures more clearly, and that would be at 92,700. So this one, again, would be a point where you would go defensive and take some positions off the table. And if we are going to have a dead cat bounce here, then usually on a dead cat bounce, it's unlikely that Bitcoin will actually move and hit the 61.8. So this would give you a very good signal that if we turned around here, then we're more likely to break below this level here at 78. But if we can make it to the 61.8, which is at 96, 97,000, then the likelihood of going below this level is much, much less. Because if there is weakness in the market, then there isn't enough strength to take it up to the 61.8, and it usually turns around at the 38.2 or the 50% Fibonacci level. So something to look out for, very important. And obviously that would depend on what's happening with the wider markets to give us some sort of a signal as to how everything else is playing out and how Bitcoin fits in with that. And of course, the only problem here would be that if we don't have a counter trend rally here and we go further lower, then we have a decision to make at this point whether to actually take a defensive position. It's not an ideal position, but it would be a painful decision to offload some of the positions here in order to protect further downside. So as we can see, it's not looking great at the moment. We would rather be in a different position than we are, but we have to respond to what the market is telling us rather than what we would wish it to be. But the likelihood of a counter trend rally is a higher probability, I would say, from here than the probability of going below the 78,000. Please remember, I'm not making any predictions. I'm not here to be right or wrong. I'm just giving you the possibilities and the probabilities, because in this market, there are no certainties or guarantees, and we just always need to keep an open, fluid, and flexible approach and respond to the price as it's telling us and not get stubborn in our own narrative of how this should play out for us. And before we finish, just have a look at exactly what's happening in the news. And we've got some more positive news here, which don't seem to have fed through into the price action with Bitcoin, but this may well do so in the next few days, and that is that the state of Utah, the Senate has actually passed the Bitcoin bill. So more and more states are actually wanting to have a Bitcoin strategic reserve. So while there is some bearish news out there, there is also amongst them some very positive news as well. Because at the end of the day, trends change in the markets, and sometimes very quickly, and anything can trigger that off. And everybody thinks that the tariffs have triggered that off, and that may well be the case. But at any one point, we should always keep an open, fluid and flexible approach and respond in a calm and relaxed manner without the emotion, so you can make the decisions which are relevant and important. That's the only way to be nimble in this market. So for now, my thinking is that we just have to be mindful that there is a downside risk. And just like what we had in April 2021, which based on the historical context of Bitcoin, we hadn't come to the end of the bull market, but we did have a significant correction before we got into the time band of the end of the cycle here at 69,000. So it may well be that we're having a significant correction here in order to frighten enough people out of the market here before we make another move. So we don't know how it's going to play out, but the time band for the end of the cycle would be anywhere around here from September onwards, as we've been saying. If we do come to the end of the cycle here, this would be unprecedented because it's never happened that we've actually closed the end of the cycle in the first half of the final year of the bull market phase. So the question, are we in a bear market? I think the biggest sign that we're getting is that of the SPX, which is the one that's showing the most amount of weakness. But as we've seen with the parabola here, the Bitcoin price seems to be breaking outside of that parabola. And of course, we've got to keep our eye on the current monthly candle and the 8 EMA, this blue line here. And at the moment, we're finding support there. So there's no conclusive evidence that we've started the bear market. Certainly, there's a lot of weakness which should alert us to be on the guard to take defensive positions going forward. Okay, so I'm going to leave it there. I hope you found value in the video. If you did, then please do remember to like and to subscribe if you haven't already done so. And if you've got any comments, leave them in the comments below. Until the next time, take care, stay safe, and I'll see you in the next video. Bye for now.